Welcome to the Back to Me podcast, where we help multicultural incoming freshman women and men manage their entire college experience throughout post-graduation to successfully transition into entrepreneurship and corporate workspaces as new hires.
Back to me. Oh, I turned it around. I'm back to me. I finally figured it out. I'm back to me. So when you think you have nothing, back to me. I go back to me. Yeah, I'm back to me.
Hello, everyone. It's your host, Yoli Tamu. As you enter the adult stage of your college experience, managing credit, debt, and taxes becomes an important concern for many. In this week's episode, we are joined by James Austin, tax consultant and the youngest associate superintendent at Twiggs County Public Schools in Georgia. As a wealth activist, Mr. Austin shares ways to properly access wealth by leveraging good debt and building a strong credit history while you're in college. Find out about the importance of tax exemptions and develop a tax plan for paying self-employment taxes as an entrepreneur. Enjoy. We have another special guest with us who is doing some great things. He's currently a student at Harvard. He's going to tell us a little bit about that. He is James Austin. How you doing?
I'm doing well. Thank you for having me.
Absolutely. So good to have you. Grateful for Miss Shelby Patrice referring me to you. And you recognize yourself as a wealth activist. What is that about?
Yes, absolutely. I think wealth is the cornerstone to liberation in all communities and cultures. And someone has to do the work and spread the news of how to properly access wealth and understand that poverty is just a mindset. And so there's a lot of movements that are taking place over the course of history, from civil rights, other specialty groups. But I really wanted to hone in on wealth, how to accumulate it in the finance piece. So kind of derive the name wealth activist from those passions.
Okay. And now you're currently a student at Harvard. What are you studying and what is the goal? What do you hope to achieve?
Yeah, so I currently attend Harvard Graduate School of Education. I'm in their master's program. It's an online education leadership program, and I'm the second cohort, so I'm excited about that. And the end goal is to impact policy on a global standpoint as relates to education. Again, being a wealth activist is one component, but I also believe that those communities, if they have better education opportunities, eventually they grow into become generationally wealthy because they have a different type of skill set and tool through education. So I'm combining both of my passions there.
I love that. So you want to be involved in policy. That's fantastic. Okay, so now you are in the educational system in the operating department, but I also know that you are a consultant for families in accounting and taxes and, just dealing with all issues that are related to finance. So what motivated you to serve young people and families as a whole is what you told me.
Absolutely. I had a great role model, a silent giant, as I would call him. My grandfather did not speak much, but he had a very good sense of how to properly prepare the family for a lot of emergencies. There was a lot of things that took place in my life. For example, when I went to Morehouse College, I did not have enough financial aid to cover my dormitory stay and other fees. And when he wrote a check for more than $13,000 on the spot for me to get into school, I had a lot of questions. Where did you get this money? How was it so easy for you to pull this out without having a concern or a strain? And that led me to really understand his process and path of what it looks like to build wealth for your family. So in the consulting aspect, the J.F. Austin Group is primarily a consulting firm. I recently added taxes to it because having good debt and leveraging and reducing your tax bill is the key to wealth. And so a lot of families, when they were trying to purchase homes, they said, well, we have credit, but our tax situation does not give us the opportunity to provide the house that we want by taking out the right loan amount. So it began to allow me to think of ways I can help those families break those curses, get home ownership, and prepare their families to go forward. So that's how my family consultancy came into practice.
I love that you're thinking about the whole family. That's so great. So now you're a Morehouse grad. How about that?
Yeah,
You are
yeah.
just
Go
something
Tigers, yeah.
accomplished. Okay. I love this. I love this. So now you and I talked about how you inform your clients about what you call the tool of credit. So could you break that down? How do you define the tool of credit?
Yeah, I think every major transaction that takes place in the United States, across the globe, has some leveraging of a credit instrument, whether it's a debt instrument, a bond that is sold on the open market, because people are not willing to just cough up their hard earned money and lose it all. So they have to risk something else to give them that risk mitigation. And credit gives you that opportunity to do that. I know a lot of clients say, well, hey, I want to be an entrepreneur, and I get the house example. Most people are not going to spend $400,000 out of their money to purchase a home or purchase a car for $40,000. They're going to use credit in order to get access to those things. So the tool of credit is a way to get access to things right now that, in other words, you couldn't afford in this current market. So I believe that if people use credit right, it opens up endless possibilities to get you to the next level.
So how do you feel about that first year of college? You know, when as soon as you hit the campus, the credit card companies are waiting for you. How do you feel about that?
Listen, I fell victim to it. I'm telling you, Ray-Ban, the company, we have to have a conversation because I went to the mall and I saw some. It was like $200. It was homecoming coming up. And I said to myself, you know what? I need to look as fresh as possible. So I'm going to buy me an outfit. And I spent over $500 and I put everything on my credit card. And so I was just a smiling and happy. And I realized that this comes with a responsibility of paying it back plus an interest. And that did not cross my mind. And so I think I had a $5,000 credit limit. I said to myself, well, I got plenty of money left. I can make this work. And that habit became more frequent. And before I knew it, I was almost maxing the card out. And while having a credit card is a great tool to build credit because it's 30% of your credit score, you have to do it responsibly and ensure that you keep your balances low. The golden rule is 30% of whatever is available. But I tell clients that to keep it below 10% and make sure you at least have 1% available because that gives you the maximum score in that category. So it is a way to build your credit. So I'll tell college kids, if you can get a secured card, meaning that put $500 up there, $200 of your money, and spend your own money so you won't overexpend and you still can build your credit. So that would be my recommendation instead of having an unsecured, which means I have nothing there but credit that I have to pay back. And I'm not working. I can't afford to pay $5,000 back, but I'm making it afford to pay $300.
So I'm so glad you're bringing up the secured card. So if they're on campus and they see all the tables and all the companies, just go right on past those tables
Yep.
and go to the bank.
Go to the bank and get you that allowance that you've been saving up, the money that you get on the side from other things that you're doing. Go to the bank, get your secure card, get your real bank account, Wells Fargo, Chase, Reputable Bank, and build your credit from that.
I love that. I love that. And then when you were talking about leveraging good debt, what did you mean by that?
Yeah, so spending, going back to my example of the shopping, spending $3,000 on things that does not benefit you is what I call bad debt. It causes you to stress about it. And it does not give you anything besides just a good feeling in the moment,
Right.
right? It's like almost eating fried food.
I was gonna say like food.
Right. You know that it's good in that moment, but later on you may have some consequences.
Right.
But good debt is things that you may not want to patiently wait for right now because the benefit is long term. So it's almost like eating healthy food or something green. It may not taste good, but you know that the benefit outweighs the bad. And so good debt would be if you wanted to purchase a real estate property. If you see a property that's $10,000, you want to renovate it, you know how to paint, fix things up, you want to sell it for a profit later. That's good debt because it's working on your behalf. It's giving you assets that you can later say, hey, I made some money off this. Or, hey, this got me access to college, student loans, for example. I call that good debt. because it does give you opportunity to actually achieve a goal that will have long-term outcomes.
Okay, I love this. I love this. So now on this podcast, we're serving that incoming freshman. And as I said, they're hitting that campus and they're being pulled in different directions. And there's so much to think about, first time as an adult, really away from home. And we also serve that graduate heading out into the workforce. And so what I'm hearing a lot is that there's concerns about how to manage money, when they get on the job, for the first job. And if they want to be an entrepreneur, what is self-employment tax about? So what are some of the concerns that you're experiencing with some of your clients?
Yeah. So I think the first thing is, I've focused on the latter going into the workforce. Having an established credit history is important because you have a place to stay, right? And most rental companies, they have you do a credit history check to see if you have any negative items within a certain time period. Also, if you're accomplished enough and you have enough money saved up, you may want to start looking at purchasing a home. You need a car. So establishing that credit history, those are some of the first things that you look at because yes, you have the job, but you have to get there and you have to have a place to relax and rest. So from that standpoint, your junior, your senior year are those years to ensure that you're building for your necessities when you graduate from college. Now, things that you need to look for on your first job is pay attention to the onboarding process. You have a lot of forms. So you may get a W-4 tax form that says how much you'll withhold, meaning how much taxes will you pay out your check. So I remember getting my first check and it said, hey, you'll make roughly $3,333 a month. And I got my check and it was like $2,000. And I thought they made a mistake. And then I looked at my check stub. I saw all these different lines coming out. And I'm like, wait, what's Medicare? What's all these things? And I think that's important to understand that as an adult, now you have responsibilities and Uncle Sam wants his cut of your responsibilities. But this is the part that's very important. There is a concept that exempting from federal taxes, you will see more of your money throughout the year. And if you do not exempt, then of course, most of that money will come out during the year. So part of the strategy is understanding that now you have to file taxes for the first time. And if you do have a lot of your money being exempt, then you will probably owe the IRS during your first tax year because you're not paying in taxes. But it's very advisable, and please consult with a tax professional in your area because states vary on how things look. But to pay into taxes, because at least give you opportunity to not have a large tax bill the following year when it's time to file taxes. So that's very important to ask those questions during onboard and coming into self-employment and things of that nature. Just because you made $100,000 and no one has taxed your money does not mean that you're not going to have a tax bill. And normally when you file your taxes and you put in that income on your Schedule C, and your Schedule C is the schedule that shows that you have a profit and loss statement, which signifies to the IRS you have a business. And if you make a certain amount of money, it will trigger the self-employment taxes and you will pay taxes at that time. So you have to set aside money out of your earnings to accommodate a tax bill for your self-employment taxes as well. As far as our incoming students that are coming to college, your main focus, if you're working, hopefully you're not working a job that's going to require too much of your time because you need to focus on your studies. And if you are doing entrepreneur things, then join programs that are more like an incubator that can help you develop those skill sets and save as much as you can, because that's going to be a very important tool for financial management is that you establish a savings account and get a routine of putting back emergency funds. I tell people that whatever your living expenses are, if you have 3 to 6 months of that in the bank account, then you can assure that you have enough stability to weather some type of economic storm. As an example, COVID-19 and the pandemic when it came.
Such powerful information. I was sitting here thinking about exemptions. You're so right. That is such a popular topic, playing with those exemptions, like, oh, maybe if I pull 2, 3, 4, 5 exemptions, get all my check. And then, like you said, you'll be owing at the end. So as a consultant, do you actually sit down with your clients and calculate what is a good exemption number to work with or to consider? Because that is a big topic for a lot of people.
Yeah, that's part of the process. As an advisor to them, I do create tax plans. I look at their current year and their prior year, and we look at opportunities. And I look at their W-4 forms and their state forms to see how much they're paying in. I look at what the brackets are for us what the IRS publishes every year, and we find that sweet spot. Everyone's tax situation is different because some people may have property that they can write off certain things for, have more deductions than others. So it may be a balancing act there. But we do go through that process. So most of my clients, they realize that when the forms changed a few years ago on the federal level, they never updated their allowance of independence. And so they realized, they said, well, my company did not take out taxes on me. And I said, well, it's your responsibility as the taxpayer to ensure that taxes are properly assessed. So going through that learning curve of knowing that you need to be asking these questions, even if you've been with that company for multiple years, you need to still make sure that your tax forms are in order year to year.
Very cool. And a tax consultant, would you say, is just as powerful as an accountant, or what do you think? Are they comparable?
Yeah, I think, tax consultants, advisors, CPAs, enroll agents, everyone has their niche and their specialty. It depends on what you're trying to accomplish. But I take the role of a consultant because we may talk about business formation, business structures. There's a lot of topics that can come out of taxes because it's really a snapshot of your financial picture over a year's time. And so that can include multiple things. And because I have experience in business, finance, tax, and accounting, I'm able to go across a wide spectrum to really help the client understand all possibilities, opposed to a CPA or a tax accountant may only focus on just the tax side of it.
Got it. And then when you mention self-employment taxes, because we're in that day and age where everybody's on YouTube and everybody's a coach and an influencer. So it's a lot of entrepreneurs popping up. So what is a strategy for self-employment tax? You said there's a certain percentage to put aside, but they can't predict their income. So just automatically save this particular percentage from whatever you're getting?
Yeah, so you're right. You cannot predict that. And your entire tax picture, if you're working full time and have a W 2 and self employed, that can look different. So it really depends on all the income that you have that will kind of trigger this self employment taxes. Normally, it's about 15.3%. That's the rate of it. So normally, what I advise is that, if you're not making projections, I'll start there because that lets me know that we need to work on that portion of your business. Because if you are in business for more than a year, you should at least have baseline revenue projections from last year, right? And so we focus on that. We make a projection. I say, listen, just say 15% of what you project your revenues would be. And if you miss that mark, fine. Just put the rest of it in your savings, but you're at least prepared to have something back just in case you have to pay their self-employment taxes. Some people take a loss and they don't have to pay any. So it just depends. If you come upside down with a $20,000 loss in your business, it would not have you pay self-employment tax because you did not earn anything. So there are certain situations to where that may not be applicable.
Okay, so 15% of whatever you're taking in, you should just put aside. Okay. Your tax tithe.
That's it. You just put in a separate account and don't look at it.
I love this. This has been so great. Wow, time just flew by. My goodness. So now we always wrap with these final words of encouragement. And I'm thinking about students that are listening that, are dealing with financial stress. You talked about budgeting for wellness. I thought that was so powerful. Can you explain that?
Yeah, budgeting historically has become a stressor in itself because you have to put certain money here. You can't go with this amount. If you don't have enough money, you have to borrow money. It just put a lot of, strain on you. And I tell people that, they say, well, hey, you can't vacation or, shopping. You got to, limit your shopping, figure out your needs and your wants. But you can have both. But the most important piece is if shopping is something that relieves your stress, then you need to budget for that. You need to budget for your vacations. You need to budget for your spa days. You need to budget for, getting your hair done, getting your hair cut. If those things is what brings you stability and peace, it needs to be a part of your budget. And I will classify it as your wellness piece because it helps you get through that active budgeting. It shouldn't be uncomfortable. It shouldn't be something that you hate. It should be something that you appreciate because it's giving you what you need to be alive, not to live. It's two different things.
Mm.
So living is you just passing time, but to be alive, you present. And I think that if your budget speaks to that, then you're budgeting correctly.
Oh, that's so powerful what you just said. To be alive and to live are two different things. Yes. That's why the suicide rate is so high, for young people, because they're just trying to live. They're not taking care of themselves. This is so great. So good. Well, I appreciate you. I appreciate that you have a connection to the mental health piece of money as well. So when they're talking to you, you're talking to the whole person. And I think that's great. I think that's fantastic. So now if they wanted to reach out to you, where would you like to send them? On IG, or you have a website? Where would you like to send folks?
Yeah, so Facebook is my primary. And if you do a quick search of JF Austin, AUSTIN group, you'll find us there. A lot of information about all the things that we talked about. So we'd love to connect if you have any questions or concerns. And you also see a book that I published actually on this on my website as well. You can find it on Barnes & Nobles and also Amazon.
Oh, great. So I have to get the title. What's the title of that book?
So it's Suddenly Wealthier, and I'm going to teach you how to build financial stability.
Okay. So we'll provide a link to that as well in the notes. This has been fantastic. I wish you so much success with being a policy leader. How about that, to reduce poverty? Thank you so much. So thank you for your time, James. This has been great. Appreciate you.
Yep. Thank you. Thank you so much.
All right. You take care. Bye-bye. Thank you for joining us. As you develop a financial plan for your future, be sure to include a budget for your wellness. For more information about other episodes, remember to subscribe to the Back to Me podcast, College and Beyond. I'm your host, Yoli Tamu. Leave a review at the end of this podcast, and if you would like to learn more about other special events, join the Back to Me podcast Facebook group, or simply text Back to Me to 833-206-4565. Until next time, be well.